countdown has begun. In 840 days, the way we use cash in Europe will fundamentally change, and with it, perhaps, a very notion of financial privacy. This isn't a conspiracy theory, it's a matter of public record, and the most unsettling part, well, it happened quietly. While most people were distracted by the noise of daily life, the European Union had passed a new law that officially starts the clock on a major shift in our financial lives. And it happened while almost nobody was watching. So in this video, I will walk you through this new legislation, what it really means for your money and your privacy, and what you can expect to see unfold over the next 800 days. The official story, the end of big cash. So what exactly just happened? On May 30, 2024, the EU Council formally adopted a sweeping anti-money laundering package buried inside a regulation that contains a bombshell. Starting from July 10th, 2027, it will be illegal for any businesses across the entire European Union to accept a cash payment of 10,000 euro or more. Let me say that again, a legally binding EU-wide cap on using cash. Now, the official story out of Brussels is that this is all about fighting crime and terrorism, and they tell you that large cash payments are a vehicle for laundering dirty money, and this cap is a necessary step to protect us all. The same law also requires that for any cash transaction between 3,000 and 10,000 euro, businesses have to verify your identity. That means taking down your personal details, checking your ID, your passport, and keeping a record of who you are. The era of large anonymous cash purchases is officially coming to an end. They are quick to point out that this doesn't affect private sales between individuals, so you can still sell your car to your neighbor for cash, for now. And yes, 18 member states already had cash limits of some kind, but this is different. This is the first time a single harmonized limit had been imposed across all 27 member states, overseen by a central authority. That's the official story, a common sense measure to fight crime. But if you think that's all this is about, you haven't been paying attention. This is step one in a much bigger plan. And here is what they're not telling you. If this is just about stopping a few criminals, why does it feel like part of a much larger strategy to change the very nature of money itself? To understand what's coming next, you have to know about the digital euro. The European Central Bank, or ECB, has been working on it for ages, and they're now moving forward. While a final decision has not been made, legislation is expected in 2026, which could pave the way for a launch as early as 2029. What is digital euro? It's a central bank digital currency, or CBDC. It sounds like the money in your bank account, but it's fundamentally different, and to its critics, indefinitely more dangerous. Your bank balance today is a claim on commercial bank, and digital euro would be a direct liability of the European Central Bank. It's state-issued, state-controlled digital currency. And here's the part they don't like to talk about: the technology is programmable. Now, the ECB will tell you not to worry. They've repeatedly stated that digital euro is meant to complement cash, not replace it. They insist it won't be used to monitor people's spendings, and it will offer privacy for online and offline payments.
A digital currency where it has been piloted, and there is only one which is clearly now launched in a very small country, but it is piloted on a fairly large scale in China, is of use and of service to all citizens. So it is not something that is good for the elite, or is good for the young, or is good for some versus others. If it is well done, and if it is well implemented, it would be of service to all citizens.
But critics argue that the technology itself opens a Pandora's box. Could a government, in theory, put an expiration date on your savings to force spending? Could they restrict you from buying things they don't approve of, like too much fuel or a donation to a political cause they dislike? In a world with this technology, could they simply turn off your money if you step out of line? This is the technological possibility that has privacy advocates on high alert. So while they say they won't ban cash, They might not have to. They're engineering its obsolescence. First, you cap its use at 10,000 euro, then you associate cash with crime in the public's mind. You make it inconvenient. You force people to show their ID for even moderate purchases. You're conditioning the public to see physical money as suspicious relic. Just a shiny, convenient digital alternative is being prepared. The cash cap is a stick. The digital euro is a carrot. And it's not just cash. The very same anti-money laundering package also takes aim at cryptocurrency. For years, crypto seemed like a potential escape hatch from centralized control, but that door is being systematically closed. Starting in 2027, the same year the cash ban takes full effect, new rules will dramatically change the crypto landscape. While self-hosted private wallets are not being banned yet, transactions involving them will face intense scrutiny. Crypto exchanges will be required by law to collect and verify the personal information of both the sender and receiver for all transactions. And if you want to move more than 1,000 euro to your own private wallet, the exchange will have to conduct enhanced due diligence, demanding to know more about the transaction. The age of easy crypto anonymity is ending. Do you see the pattern? Avenues for financial privacy is being narrowed from all sides. Anonymous cash is being restricted. Anonymous crypto is being tracked. All paths seem to lead to one destination, a highly transparent, centrally monitored financial system that brings us back to the 800-day countdown. And here's a rough timeline of what to expect. Phase 1, this quiz, we're in it now. The laws are passed, the new Central EU Anti-Money Laundering Authority, AMLA, is becoming operational and will be headquartered in Frankfurt. This agency will be the eye in the sky, coordinating between national governments. Phase 2, the transition. The 10,000 euro cash cap officially kicks in. The full force of the crypto regulation takes hold. At the same time, we'll likely see the ECB ramp up its pilot program for the digital euro. Marketing is at free, secure and convenient.
Other good news is that on October 23rd, the European Council has asked us and all those involved to accelerate the process. More work is going to be done in the next few months, and if we receive the approval by the European Parliament in the course of 26, we'll be able to pilot the digital euro as of 27. And if the pilot is conclusive and positive, it will be a formal rollout in the whole of Europe in 2029.
And this is when the transition to a new financial ecosystem begins in earnest. And phase 3, the new reality. If the digital euro launches, it will at first coexist with cash, just as they promise. But with cash being harder to use and viewed with suspicion, critics fear the digital euro could become the default. The concern is that salaries, pensions and government benefits might eventually be paid in the new digital currency, nudging everyone into the new system. Now here's the real question. Let's be clear about the central debate. Is it truly about stopping money laundering, or is it about information and control? A world where every digital payment is logged in the central ledger is one where financial privacy is gone. It's a world where government could, if choose to, know where you shop, what you buy, what you read and who you support. What happens when they decide they don't like what you're spending your money on? What then? In a world of programmable money, your ability to transact could theoretically become conditional. This transforms money from a simple tool of exchange into a potential instrument of social policy and control. It creates a system where you might need permission to participate in the economy. This isn't a slippery slope, it's the fundamental question raised by the architecture of this new system. So what can we do? This isn't a call to panic, it's a call to wake up and pay attention. The first step is to understand what's happening. For now, you can still use cash, but be aware of the new limits coming. Understand that large cash purchases you make at businesses will soon be recorded. For those in crypto, understand the new rules that will track your digital assets, and most importantly, talk about this. Share this video, have conversations with friends and family. The greatest tool any government has is a public that isn't paying attention. They are counting on you not noticing, and it is too late. The rules of money are being rewritten to stay ahead of these changes and protect your financial future. make sure to subscribe. I'll be tracking every single development for you and offer you ways how to protect yourself and your wealth in the future. Let me know your thoughts in the comment below, and I'll see you in a minute and this video right here.